right, welcome back. Today is Friday, March 25th. Joining me again is Steve Straza. Steve, how are you today?
Doing all right. How you doing?
I'm doing well. It's Friday. The markets are closed. Let's get right into it. So at the index level, the NASDAQ led for the second week in a row, gaining about 2%. The rest of the indices, S&P 500 gained about 1.5%. The Russell 2000 was the only one that closed lower. Took a little bit of a break after a pretty strong week last week. Not much has changed in the outlook there. We're still watching that 2100 level. That would be the bottom end of the range that we spent most of last year. And a break above that would be a huge win for the bulls. But we're still below it. So we'll see how that plays out in the near term. 2011 on the IWM, 2100 on the Russell 2000. That's the line in the sand. At the sector level, energy rebounded. It kind of took a breather last week, but up again about 6%. We're back at that key 78, 79 level. And this kind of is one that a lot of people have their eyes on right now. Energy continues to be the strongest sector. I think it's up about 40% year to date still. So that 78, 79 level, really key. It's been resistance for the past 8 years, and we still haven't broken it. We tried a couple weeks ago. Last week, we took a break, and we ran back at it again this week. Steve, we got this headline from The Economist, this one on the right here, Power Play, the new age of energy and security. And that one on the left, that one's from 2003, the end of the oil age. And I think both energy and crude oil went on to double and triple after 2003 up until 2008. So The Economist, as we know, they have a history of getting onto trends towards the end of the trend's life. What do you make of this? Are you fading this move in energy here yet? It's right at resistance. What are you making it? Is that too cute? Do you not want to fade it here? What do you think?
Yeah, it's a little cute. And first of all, that one's from 2003, you said?
The one on the left, yeah.
Wow. Yeah, I'll bet there was, I know there was, it's not coming to mind right now, but I know there was a good one late 2019, early 2020 also, calling an end of energy right before this massive bull run. Listen, we like these magazine cover indicators as much as anyone, but I'm not going to fade this one. Magazine cover indicators like this are not signals in and of themselves. This is just sentiment. We look at it like breath and our inner market. It's ancillary evidence, right? It's really nice when it's confirming what we already believe. And sometimes, if we're on the fence about something, it's nice to see. But all the evidence right now is suggesting that this bull run in commodities and commodity stocks is not even close to an end. So, I'm on board with this Economist cover. I think it's going to last. So
interesting. So you're not fading it.
I'm not fading this one. Nope. No,
all right. Obviously the big story this week was the move in yields, right? The 10-year continuing higher. I think it ended near 2.5%. And there's a lot of eyes on that 3% level. And are we going to hit it or not? And then the 30-year, fresh breakout this week. It's almost breaking out the same way that the 10-year broke out back in January. Very similar multi-month base setup. What are you making of all the action in the bond market now?
Yeah, this is part of that evidence that I just mentioned, right? That's suggesting a longer run for cyclical stocks, commodities, rising rate environment, inflation expectations continue to rise. When you see the long end confirming what you're seeing from the 10-year, which is really the middle to long, some people consider, what that really tells you is that growth is fine, right? The economic outlook is absolutely fine. And right now, that's a really big deal because at least over in Europe, developed Europe, there's been a lot of grumblings about we're already in recession. This is a recession. The war between Russia and Ukraine is causing all this, an economic downturn over there. Well, listen, if we looked at a chart of the German 10-year yield, which I know we've discussed on the show before, you would see something similar. It's breaking out of a massive base, new multi-year highs. what that's telling you is that even over in Europe, the recessionary fears are not that bad. The market is not pricing in any sort of, major adverse event here. Rates continue to rise on the long and middle end of the curve. That's telling you things are fine. So that's the big takeaway from me. And then also, if you take that to the next level, okay, what stocks tend to do well in a rising rate environment? Then that's your energy, your materials, your commodity names, right?
Yeah. I mean, there's been so much discussion over the yield curve in the past couple of weeks. And is it going to invert? Some parts of the curve are already at or close to inversion. Others are totally not. Here we have the dynamic yield curve. And, for those who don't know, the yield curve has been a great signal of recession. Typically it inverts, and then 12 to 24 months later, you have a recession.
Yep.
So what do you make of all this in addition to what you just said?
So right now we're in this unique environment where it's like, okay, well, what part of the yield curve? So you can see it here pretty well. The 10-5 has inverted. You see that slight dip, right? Between the 5 and the 10 year. And then the 30-10 or the 30-20 has also inverted. A lot of people would say those are not the ones we want to pay attention to. I was talking to Willie internally, and he was making a very good point that even the 10-2 people tend to make too big of a deal out of, right? The reason for that is because what the 2-year yield is showing you is what the market believes the Fed will do in the future. That's what the 2 years is really a reflection of. Now, if you look at something shorter, like the 3-month, that's what the Fed has already done or, is doing now. The 3-month isn't going to move until we actually see the rate hikes. The 2 year is going to move in anticipation of the rate hikes. If you go to the next chart, it paints a completely different picture. So if you're looking at the 10-3, we're making new highs. If you're looking at, and when I say 10-3, I mean the 10-year 3-month curve. When you're looking at the 10-year 2-year curve, it's falling off a cliff. So it's like, which one do you pay attention to? Which one do you listen to here? Internally, we would argue the more important yield curve to pay attention to is actually the blue line here, which is the 10-year minus the 3-month.
Interesting. So that's the one you're paying attention to. You wouldn't put as much weight on the 10-2.
Listen, it's not a great thing. Would I prefer if the 10-2 was rising? Sure. But you also have to just, like we just talked about, what is it moving due to? Well, it's moving because the Fed is finally, hiking rates, and the market is pricing in a year of rate hikes in the future. So listen, the yield curve stuff is great. But at the same time, as you already mentioned, it's looking out 12 to 18 months. So even if you said, okay, the 10-2 is the one to pay attention to, we're about to invert, and it hasn't inverted yet. It's very close, and it will soon, but it hasn't inverted yet. Even so, then what that tells you is, all right, great, but we got 12 to 18 months to go. So it's not something to panic over and sell everything right now. Stocks are still an uptrend. Stocks are still making new highs. I think you can continue to bet on the things that are working. It's not time to play defense, in my opinion.
Yeah, I think one of the most interesting things from this week was the fact that the 10-year continued high. I mean, really yields across the board continued higher, but the NASDAQ led, right? And that's kind of the first time this year that we've seen the NASDAQ be so resilient in the face of rising yields. How do you interpret that? Because that one, I've been trying to make sense of that, and I just can't get anywhere.
Right. So, if I was a fundamental analyst, I would probably have a lot more to say about this. It's probably a situation where, pressure has come on growth stocks due to rising rates because it's just a valuation thing. When rates rise, that's the discount rate that you're using in your valuation model to value and price these growthy stocks. As the discount rate rises, you're discounting those future cash flows at a higher interest rate. So they're coming back at a lower present value. Maybe they've gotten to the point where the market has repriced these appropriately enough that they're no longer afraid of this rate hike news, right? The market's forward looking. So growth stocks have already priced in the rate hikes of a year, 2 years from now. So maybe that's it. A lot of these things are in 70 to 80% drawdowns. I don't want to be making the bet that Square or PayPal are going to zero. So at a certain point, it has to be enough. Maybe we're there, maybe not. I would, I would kind of look to the chart for the ultimate confirmation of that. But if a fundamental analyst came to me right now and said, listen, these growth stocks are appropriately priced. They've been, discounted enough. They've taken on some tremendous haircuts since last year, valuation wise. I'd say, yeah, that makes sense, right? When you look at some of these drawdowns, it's like, how much more do you want if you're a bear?
True. Yeah, I mean, let's move on because I can't think of anything more boring to talk about on a Friday than a potential yield curve inversion. So let's move on to what's working. Commodity related stocks continue to be an area of strength in this otherwise confusing and dull tape. So, and we saw a lot of fresh breakouts in that commodity related space. What are some that had your eye?
And this is a part of that evidence too, like everything's okay, right? These commodity stocks just keep breaking out. The list of names that have resolved higher from these bases that most date back to May of last year, the list of the list of stocks that are breaking higher just continues to grow with every passing day. This week we had a major development, in my opinion, where you finally got the steel ETF and the copper ETF to resolve higher. So now you're seeing at the index level. To me, this is just another vehicle, another way to express the same thesis we've been expressing all year. A lot of these steel and copper stocks have already left the station, and the risk reward is no longer really in our favor. They might be right in the middle of our risk level and our price target because they've already broken out and they've been trending higher for weeks already. Now, if you've missed any of those, the indexes are giving you a great opportunity to get in. You can define your risk very clearly at a key level of interest at the highs from the first half of last year. There's a lot to like about this. And I think the overwhelming evidence is that it just keeps coming in. With every passing day, there's more and more commodity stocks confirming our thesis.
Yeah. And you had one in particular, and you weren't the only one talking about this one, MP. I know a lot of people saw this breakout, and it is a great looking one. Why don't you speak to that?
Yeah, a lot of traders have had their eye on this name, which is really cool. You mentioned it to me earlier this week. Brian Lund has been talking about it on our Twitter Spaces every day. Listen, this is actually a rare earth metals company. They own the only rare earth mine that can operate at any significant scale in all of North America. It's the only rare earth mine in the entire United States. It's over by you guys in California, actually, believe it or not. And the best part about this name, the part that I love the most, is this was a SPAC. This was a SPAC combination in late 2020. And if you remember what was going on then and through 2021, SPACs were acquiring growth stocks. They were combining with SaaS companies and internet stocks and crypto things, right? And all this growthy stuff. I don't know many that were actually buying materials companies and combining with miners, right? So the fact that these guys actually SPAC'd a miner is very rare, very unique situation. And I think it's super awesome. You can see the chart here. It's beautiful. We're just breaking out of like a, almost 12-month consolidation, 12-month continuation pattern. We're looking at this thing going to $80. There's also been a lot of insider activity. The CEO owns over 30% of the outstanding shares in this name. You love it when, the company's, and he's the founder too. So you love it when a company founder and owner and operator, has skin in the game and is putting his money where his mouth is. There's a lot to like about MP Materials right now.
Yeah, I know you had mentioned earlier to me about some insider buying going on. Was that the CEO you mentioned, or?
Yeah, so there was insider activity by both the head of legal counsel, general counsel, and then also the CEO purchased a bunch more shares. He's got like a 31% position in the stock now. So yeah, that's
head of their legal counsel. Interesting.
Yeah, right. A much smaller.
All right, so I got an absolute degenerate chart for you. You got to promise you won't laugh.
I'm gonna laugh.
All right, so AMC. I mean, this is literally a meme stock, right? The meme stock. But 20 has been the level for its entire history. You've seen some pretty major reversals around that level. And this is still the third largest component in the Russell 2000. And I get it, the Russell 2000 is a lot more broadly weighted than something like the S&P 500. Yeah. So it's not the same as being the third spot in the S&P 500. But still, I got to ask, if we're above that 20 level, which we are, What is that going to mean? And is that a little false breakout? I mean, RSI did not even get oversold on the weekly in this year's decline. Is AMC going to start popping off again? I have no idea, but this is definitely a fun one to watch.
It's a fun one, and I would leave it at that. Listen, yeah, it's there, right? You've shown the level. That's a key level of interest. Totally. Could that be a little shakeout move, a little failed move? When we rip higher, 100%. I can trade some junky stocks. These names aren't for me, mostly because I don't like the headline risk. I don't like there's always news.
Did you see they just bought a gold miner?
Yeah, they just bought, exactly. So there's too much there for me. And what happens when there's a lot of news, news-driven volatility in a name is, as a technical trader, the trend matters less, right? It's going to be susceptible to gaps and wild moves. I like a stock where nobody talks about it. It's nice and quiet, and it can just follow its supply and demand, Yeah. So I try and stay away from these headline ones, but I got to tell you, something is going on with the meme stocks. GameStop continues to pop up on my insider activity scan. Actually, 3 insiders just this week purchased, 3 company executives. So,
wow. Very interesting. Well, I don't mean to degenerate even further, but we got to talk about Bitcoin. My chart of the day, this one's from Frank Capillary. This is going to be a really interesting test. RSI is finally in a bullish regime above that 50, 60 level where you want to see it. And in addition to that, you have this is also from our friend Frank Capillary, Ethereum versus Bitcoin. You have Ethereum breaking out of a 4-month downtrend relative to Bitcoin. And, that's not bearish for Bitcoin. I think, if anything, seeing that higher beta one, which is Ethereum, outperforming Bitcoin, that's bullish for the entire crypto space. Have I got that wrong?
It is. In a lot of people's mind, yes. I think the more mature that crypto gets, I don't know if you want to continue to glean, that type of information from this ratio. Listen, yeah, that's kind of worked in the past, but I think the safer bet is to just look at a ratio like this and say, that means we want to be buying Ethereum instead of Bitcoin. Mm-hmm. Not bearish, though.
You wouldn't extend it to, this is bullish for the whole crypto space.
I think you want to be careful with that. Crypto's a weird place, and in terms of intermarket relationships, right, and these historic correlations, there's still a lot to learn. If something worked in 2012 or 2013, well, the asset class was 3 years old. Is it going to work today? I don't know. I think you need to be more careful with the intermarket comparisons in crypto than you do in traditional capital markets. Yeah. That's all.
And just to be clear, Frank wasn't saying that. He was just saying Ethereum is breaking out of that 4-month downtrend. And typically when you've seen that ratio break multi-month downtrends, you've seen a strong move from that ratio.
Yes. And that's the opinion of a lot of analysts I know. So like I said, I like to stay away from the intermarket relationships there, but that is the popular, consensus.
Yeah. Well, Steve, why don't you break us through this other one? JC shared this awesome chart of the Aussie dollar versus the yen, and was pointing out that it's very positively correlated to Bitcoin. And that one has already made its move higher. Bitcoin has yet to do. What do you think?
And doesn't Frank overlay Bitcoin with the 10-year also?
Yeah, I have that one here too. It's kind of a similar thing, right?
Same thing. Exactly. It's the same thing, right? 10-year. Rising rates, Aussie yen, risk on, cyclical. Bitcoin, risk on, cyclical. A lot of people like to talk about how correlated Bitcoin is with the NASDAQ and growth stocks. And it is. But if you zoom out a little bit, last year, it peaked around the same time as all the cyclical stuff. So Aussie yen, if you overlaid a chart of transports or copper gold, those would look similar also, right? So it really has this cyclical nature, but also this growth nature. And that's what I mean about the intermarket relationships. We're still learning, is it a growth stock or a value stock? You can make a really sound argument for both cases right now. I can overlay this with the NASDAQ too, more recently, or software stocks, and there's a relationship there also. So at the end of the day, Bitcoin is a risk asset. It doesn't move with like gold, or it's not an inflation hedge. It's not a currency. It's a risk asset. Which one to which group I don't know, but the fact that this correlation with Aussie yen is so strong, you can easily argue this is a risk on. This is a cyclical theme here, right?
Yeah. But either way, I mean, it's right at that 45,000 level as we speak.
Yeah.
So that's going to be a really interesting one to watch this weekend. Are there any particular cryptos that you're watching?
What does LFG mean?
Am I allowed to say? Let's go.
Yeah. So the cryptos that look good right now are mostly just Luna. Luna is like in a league of its own. Looks so good.
Yeah, I have this chart here from David Rath of Solana, talking about how the 50-day moving average has done a great job at defining the trend, and it hasn't turned up just yet, but that's another interesting one to watch.
They're looking really bottomy, aren't they? A lot of these cryptos. Solana was beat up. That's a nasty drawdown that it suffered. But if you look at that chart, there's a nice bullish momentum divergence there. It's been really, carving out a nice little tradable low. I think you're going to see some sort of, reaction higher from these little bottoming patterns. Now, how much legs that move has, how far that move can take us is going to be the next key piece of information, right?
Yeah, and I think that's a really interesting point. You mentioned like base building. I mean, there's still so many dead bodies on basically any crypto chart. So it's in that repair process. And I think that's kind of how you have to look at it rather than a breakout to all-time highs where you have that fresh momentum behind you. It's more in that repair thing, but nonetheless, it's not bearish.
And another thing I will say about, that whole repair phase and this, building out a bottom type of theme in crypto is if you compare some of these crypto charts to ARK or some of these growth stocks, the bottoming, the bottoming process in crypto started a long time ago and looks far more constructive than some of these growth names. You could see it in the Bitcoin chart right here. The lowest low this year was made very early in the year. That's not the case for most growth stocks. So I think Bitcoin is further along in the process and is showing, more bullish characteristics of a reversal. So it'll be interesting to see what kind of follow through we get.
Awesome. Well, good stuff. Steve, I think we'll leave it there. Thanks for coming on. Have a great weekend. Enjoy that stone crab. If you guys enjoyed the show, please click like and subscribe, and we'll see you again next week.